And let's talk about the Federal Reserve, because they will release the minutes of the July 30th and 31st meeting in just a couple of hours. Investors are going to look, obviously, for the details about the central bank's decision to cut interest rates for the first time in more than a decade. President Trump targeted the Fed on Twitter this morning. Are you ready? Here it is. Quote, Germany is paying zero interest, while the U.S., a far stronger and more important credit, is paying interest and just stopped quantitative tightening. Where is the Federal Reserve? Joining us from Washington, Jessica Smith. And the Fed is actually out to lunch. They're having lunch, Jackson Hole, Wyoming. Jess?
Yeah, exactly. And the president is continuing his rant about the Fed as he talks to reporters. He just said that Powell raised rates too fast, too furious. He says the economy is doing very, very well. He says it's the strongest in the world by far. He says he's not going to demand that the Fed cut rates. He says, I don't demand it, but if he, referring to Powell, used his head, he would do it. Now, as you mentioned, we are expecting the minutes later this afternoon, and they will hopefully shed light on the decision to cut rates last month. Of course, investors are also looking for any clues about what the Fed will do in September. Fed watchers were largely unsatisfied after Powell's press conference last month when he said that this wasn't the start of a long cutting cycle, but he also said he didn't say it was just one cut necessarily. So investors will be looking for any clues about the driving factors that led to that rate cut and any insight into the Fed's thinking about downside risk like trade tensions with China. The president on Twitter this morning also downplaying those China risks. We should note that these minutes do not include, the meeting happened before the president escalated the situation with China. Just the day after the meeting, he went ahead with the new tariffs on China that go into effect on September 1st. So they will be a little dated. And of course, as you mentioned, this isn't the only thing we're watching this week. We're also watching to hear from more Fed officials in Jackson Hole, including Chair Powell this Friday.
Jess, some of us stuck in the 1990s and the last decade, for that matter, get worried when we talk about deficits, but not these days. The CBO also expects the deficit to grow more than expected. They're citing tariffs as a problem. Help us understand what's going on and why nobody in Washington seems to care.
Right. Well, the CBO just released this new report, and it says that deficits are going to grow more than expected. And it said that trade concerns, including new tariffs that have been put in place since January 2018, will actually reduce U.S. GDP by 0.3% by 2020. So they're saying that this will hurt economic growth. And when you look at the deficits, the CBO says the federal deficit is going to hit $960 billion in 2019. That's $63 billion more than it previously expected in May. And that is largely because of that bipartisan budget deal that was passed last month. It also talks about the federal debt and says by 2029, federal debt will hit 95% of GDP, which is the highest level of debt seen since the end of World War II. And the CBO, of course, says this is just unsustainable. And it said lawmakers need to change tax and spending policies to put this back on course.
Jess, thank you. We're going to talk about it with the panel. Emily, we spend more than $700 billion a year on national defense. Our interest payments on the debt are going to they're going to be greater than our spending on national defense in the mid-2020s. Your generation, not mine, your generation is the one who's going to pay for this, and yet nobody seems alarmed.
Well, exactly. I mean, this is a conversation that comes up continuously if you think about the debt ceiling debate that we just had a couple of weeks ago. That is, it remains essentially up in the air. And to now have this come in tandem with these statements saying that, tariffs are going to reduce GDP and showing just what these policies now have in terms of a long-term effect. I don't know that it's necessarily going to make any changes. It doesn't seem that any nonpartisan reports have made any impact at this point. But it's just another justification for what the long-term impacts are that people need to start honing in on.
We have a spending problem in this country. We spend too much. And we're not going to fix that by taxing more, because that just enables more bad behavior. I mean, think about the fact that 2/3 of the government budget goes to Medicare, Medicaid, and Social Security. And those three programs, by the way, are going to run out of money in 7 to 10 years. It's crazy. And you're right. We're totally kicking this whole thing down the road and not even dealing with it.
Let's just break apart, though. Social Security doesn't run out of money. The ability to pay 100% of benefits drops to 80%. There's the trust fund. Well, Medicare and Medicaid, different discussion. But
you say it drops to 80%. I say it runs out of money. It's the same.
No. Listen, I can remember when you say we spend more, it goes back to the late 70s. Actually, it's 1980s. It was the 1980s, the decisions we made as a country to take on more and more debt, but nobody seems to want to start.
And now we're facing it. And by the way, all we really have to do is just look at Europe, right? Because back in 2008, they didn't ever take the write-downs. They just kept kicking that can down the road, which is why they now have negative interest rates, because they had to keep propping everything up. If anything, Europe is a warning. Our economy is incredibly strong, thank goodness for the American consumer, but we're spending money we don't have.